Investment Officer at Emkay Investment Managers. Manish, always a pleasure speaking with you, and thanks so much for taking the time. Happy Friday to you. It's looking like a happy Friday after a while, I must say, and at the start as well, because some of those fears seem to have dissipated even as this truce seems to be a little bit fragile. But the fear seems to have dissipated somewhat. Do you agree? And the focus is now going back to earnings.
Yeah, I think 2 weeks, the deadline, market will be rather range bound. I mean, plus minus 5%, unless and until we hear something decisive. I think 22,000 on the downside should hold and 25,000 on the upside is unlikely to be broken till about the final verdict on the ceasefire is out. Of course, we are moving in the right direction, and that is why markets basically from a rapid short selling squeeze that we saw the day before yesterday is likely to be continuing as we progress into the earnings season, because earnings season is not likely to be that bad, at least for this fourth quarter. Numbers should be in line with or maybe certain sectors will do much better than estimates.
Manish, did the nerves of titanium get tested in the last 1 month? And do you believe now that the valuation reset, and arguably we are about 8-9% or 6-7% higher than the lows, but is this the valuation reset that you might have been looking for, and would make you be fully invested?
So I think geopolitical situation, if the ceasefire truce does not hold good, then it's going to be problematic for India. In line with many parts of Southeast Asia, because we are very heavily dependent on energy imports and fertilizer, subsidies on gas and all of that. So the good scenario is that we should settle this. If that be not the case, then earnings damage for FY27 is likely to be there, because we are in for an inflation shock, supply chain shock, and growth reset. Consumption is going to take a hit. Government might stick to FRBM, and your capex spends, etc., could also be cut. So all of that would mean that FY27 numbers will be reset, and FY28 would be the new normalized year if this whole thing gets lingered on. If not, if we are in for a diplomatic settlement, talks are in tomorrow, and let's assume for the best that things don't escalate further from here, then obviously, we have seen a February 28th till first week of April, the damage is not going to be that bad. I think earning estimates are likely to hold at around 12-13%, and that's not too much of damage before we entered into the crisis. And it's back to normal. And, this 17-18p has been tested time and again. 22,000 also got tested now. 4 months of relentless selling, but we didn't break 22,000. And hopefully, this would set the new low for the markets as we move higher into the normalized scenario.
Okay. Manish, what did you make of IT result that has come, or IT overall? Are you worried about Mythos?
So unexciting, to say the least, except for the fact. Yeah, I mean, see, these stocks are all trading at 6%, 5%, 4% free cash flow yields.
Yeah.
So they are not going to fall, because 4 to 6% free cash flow yields signify zero growth. And we are still talking about, TCS actually commented about low single-digit growth still to come in FY27. It's only that, except for even after rupee depreciation, we didn't see too much of a margin expansion. And in YOY terms, constant currency dollar terms, revenue didn't grow. So which means that, yes, they have alluded to the fact that AI is an enabler, and, you have $2.7 billion of annualized run rate on revenue from the AI portion of the turnover. All of that is fine, and adoption will take time. So I would believe that reset of valuations is not going to happen on the upside. Whatever is the earnings growth, that bit of an upside we should build into, the market cap as we progress into FY27 numbers.
Okay. Manish, there are a lot of new things that have emerged, right? And because the central thought seems to be that energy transition and power generation will become the constant theme for the next 4 or 5 years, no matter what else happens. Would you believe so? And if so, how do you play that?
So, the Middle East crisis has exposed energy security for India, for sure.
Yeah.
We are so dependent on fossil fuels, and one closure of Strait of Hormuz, and we have seen Brent go up, and, no LPG, and fertilizer subsidy has, and, gas rationing is happening for sectors. Morbi has been shut down. So there is a need for alternate sources of energy, and obviously renewables is one area where we can do a lot. And generations that have been taken care of. Transmission losses is the need of the hour. New Electricity Act is around the corner. And, HVDC, low leakage on losses on transmission is where the focus is. So transformers, etc., are seeing order books closer to 4 to 5 years, particularly in the higher kV segment. So yes, it is a given now that energy security is required. Our vulnerability on fossil fuels remain exposed, particularly after closure of Strait of Hormuz. And maybe this is the tactic that might be used even in the future, the closure, the leverage on the closure of the Strait of Hormuz. So I would agree that metals, power, energy, renewables, they are going to be in the limelight for next many years. You've got to find stocks which have valuation comfort, not that stocks are still discounting FY30 numbers. Great stocks, great earnings bought at insane prices also won't make money.
Manish, speaking of energy, and I don't know if you've identified pockets of opportunity with this entire nuclear conversation coming through, right? The potential exists, but I wonder in the listed space, how will you play it? There are a few names. NTPC is doing a few MOUs, but these seem to be very nascent and very early days. So do you see this panning out in the very near future? Because it seems like the government wants to accelerate this program very, very quickly. So will that present opportunities heading into FY28 perhaps?
100%. So, the vision document says 8 gigawatts going to 100 gigawatts by 2047.
Yeah.
And 20,000 crores has been allocated. So government's focus is there on the nuclear side. And we don't have a direct play, but indirect plays are there. The pump companies, the cooling, the reactor cooling agents, the guys who actually manufacture the reactors, they are trading at pittance in terms of growth and valuation currently, but they can be very big companies. So ancillaries, tier 2 players supporting the nuclear infrastructure, a lot of them are still there as a play.
Manish Sonthalia, the usually very bullish Manish Sonthalia is sounding a bit, how do I say?
No, I'm not bearish, Niraj. I'm saying...
I didn't say you're bearish. I'm saying you are not sounding bullish. There's a difference. But no,
I think the time will come to be hyper bullish. Let's get this 15 days out of the window. It's back to normal. Once that is visualized, I think it's going to be rapidly moving higher from here.
Manish, you have our numbers. You turn hyper bullish. Please give us a ping. Even if it's 7 days hence, we'll get you back on air if you have the time. Would love to chat then again. As we did love chatting to you today. Thank you so much for taking the time out.
Thank you.